Good afternoon. Good afternoon. Welcome to another Wall Street Wednesday. Today is what? Today is October 6th, 2021. This is Professor Milligan, Wall Street Wednesday. This is episode number 65. Welcome, welcome, welcome. Like I always start off, let me throw in my disclaimer. These are my thoughts. These are my opinions. These are my beliefs. If you decide to do anything, remember that the stuff that I do is risky. And you should basically speak with your advisor, your financial consultant, whoever it is that you're dealing with, unless you make these decisions yourself. But again, these are my opinions, my thoughts, and nothing I'd say is guaranteed. In fact, one of the mottos I always tell my students, and I'm telling you guys, is that if you think you can trade and never be wrong, never lose money, then let me be the first to tell you that you're going to be wrong. If you're wrong 40% of the time, which means you're right 60% of the time, you'll be considered one of the top investors. All right. So no one bats 100. Don't try and bat 100. Do your best, of course, but no one bats 100, even the great Warren Buffett. So with that said, it's been a really, as you guys know, volatile week, volatile last week and volatility this week. But one of the things I always talk about, and I'm going to talk about it now, is that, my strategy, my main strategy is I buy stocks on breakouts to new highs and on increasing volume. And I've been doing this strategy now. Well, you can see it. I had this strategy. I've been doing this strategy when I actually had hair on my head and it was a lot longer than what was on my face. So I've been doing this strategy for a long time. And when I first started doing this strategy, the thing I finally discovered, which I lucked into, I admit it, I lucked into it, but I was observant and I lucked into it. And that is, I only buy stocks that break out. So like now, I'm looking, there's a handful of stocks that broke out. Affirm broke out, Netflix broke out. When I mean broke, they set new highs. Now, there's a couple of them challenging new highs, but they set new highs. Now you have a whole bunch of other stocks that are basically 10% off their high and a little lower, but I only buy stocks that break out. Now, why is that important? Well, it's easy. For the last last week with the volatility in the market, I basically couldn't find anything to buy. All right, and the reason being is my strategy kept me out of the market. Now, the other side too is what's going on, Gary. The other side of this too, what's also going on is that if you're buying stocks that are breaking out, if you can't find anything breaking out, you can't find anything to buy. Now, I am a believer. I am a strong believer in cash is one of your tools as a trader. Now, follow me here. If you take your portfolio to 100% cash, if you're a trader, you cannot lose money in cash. So what am I saying? If you can't find anything to buy, you don't like the market because it's turbulent, go to cash. Go to cash and sit on the sidelines and wait. There's nothing wrong with that. All right? You don't have to be fully invested 24 hours, 7 days a week. You don't have to be. So as a trader, one of the things you have to learn is patience. It's funny, you track stocks and then you try and time the best time to actually buy the stock. The reason why you're trying to time the best time to buy the stock is because as the stock breaks out, you can get on board. If the stock has not broken out, I'm not saying it's not going higher. I'm just saying that you could be sitting there for a while. So timing is everything. Affirm's running again. But even with Affirm running, I'm looking at the chart now. I don't believe, I could be wrong. I'm looking at the chart now, so bear with me a second. Just bear with me 1 second. Yep, I thought so. Even Affirm's not at a new high. The old high on Affirm, I'll give it to you. The old high on Affirm is 147. We closed the day at 133, basically 134, and the high today was 138. So even Affirm's not there. Now it's trading like a monster, and you guys know the story. It's trading this way because of what happened. The announcement that Target now is going to use Affirm as one of the companies. So, it's going to drive business to Affirm. And so that's why it's jumping like that. All right, let me get started. Couple things here. I'm going to the commodities. Last week, I'm looking at it. I'm looking at my notes from last week. I write notes on everything. Last week, I had mentioned to you guys that oats, O-A-T-S, oats. I mentioned that oats was running. Well, I'm looking at the technical analysis and the fundamental analysis on Oats, and Oats is still running. So if you went long Oats, stay long Oats. All right, it continues to run. It looks good from a technical standpoint and a fundamental. Now, if you do not own Oats, I'm not sure if I'd be chasing it here. All right, I'm pulling up the chart as I speak to you. I'm not sure if I'd be tracing it here. Oats. And the reason being is Oats has made a nice run. Oats is the first breakout we got on Oats was back in July, and Oats has been running ever since. It's done some backing and filling, and it runs back and fill. So it looks like it's backing and filling right now. So, but again, I wouldn't chase it. And let me put up my 10-day moving average. I want to see how far above the 10-day moving average it's trading. All right, it's not overextended, so I take that back. If you wanted to buy Oats, you could buy Oats here. All right, it's an upward trend. It's running though. And there's some periods of consolidation. We've had several consolidation and breakouts over the last 2 or 3 months. So I like the Oats. You can stay long the Oats. The other one that I told you to short was OJ last week. And I'm pulling up the chart on OJ right now for you guys. OJ. And stay short OJ. It tried to have a little bounce here to move back up, and the bounce failed. So stay short OJ if you're short. It looks like there's more left in it to the downside. The commercials are large net short position, and I'm just pulling them. So, and it's in a downward trend. It's been in a downward trend basically since basically the last 2 weeks, 3 weeks. Been in a downward trend. So I would like I said, I would stay I stay short. If you're short, stay short OJ, and you can get short here. All right, now let's move on to the cryptos. I say this and I say it again. Cryptos trade like gold. Cryptos trade on basically supply and demand. There are no fundamentals behind cryptos. All right. And what I mean by that is there's no cash flows coming off this. There's no balance sheet. There's no income statement. Cryptos are basically trading like gold based on supply and demand. In fact, I read an article where a person wrote gold was a horse and buggy, and cryptos were the new, jet stream car. So basically, it was talking about that cryptos is the way to go. So with that said, you guys know that I think it's Brazil said they're going to start accepting. I think it is Bitcoin as a currency, and you're having that. So you have some major announcements here that's going on. So let me talk about that. And I told you last week that a lot of them were in the trading range. Well, last week I told you that Bitcoin was in the trading range, and that if it broke through 45, it should break and then run. Well, Bitcoin took out the resistance at 45. Now it's in the trading range between 52,000 and 60. The all-time high is 64. So there's not much between here and 60. And what I mean by that is there's not a lot of resistance there. So keep an eye on Bitcoin. And again, this is a milliganism. If Bitcoin goes to that old high at $64,000, become an aggressive buyer. I don't believe in buying on the dips because I don't know if the dip's going to turn into a free-for-all or a downtrend. In fact, if you think about it, if you followed my strategy over the last month and a half, you basically couldn't find too much to buy. The dips kicked you out of the marketplace. And what's interesting about it is some of those dips turned into some major moves to the downside. So I'm not a big fan of buying the dips. The only way, and I got to say this, if you're in there buying dips and you're watching the financial channel and you hear these analysts talk and these companies talk, you got to remember, you're not a portfolio manager. You're not managing 100, 200, $1 billion. You're not managing that. So understand this. For them, they're buying dips because they're adding to a position they already have. All right. So if you're long 100,000, 200,000 shares, 1 million shares of a stock, buying another 2, 3, 4, 5, 10, 20,000 is not going to be a big deal. So that's why you'll see these long-term institutional investors buy dips. If you're a short-term trader or you have a smaller account and you don't have the funds to buy a dip, then follow my strategy. And what that means is when things aren't going well, use your stop losses, get out, and then when the time comes, buy back in. The main reason why my strategy is going to appeal to you is that my strategy is based upon protecting what you make and also not giving it back, and also not losing money. You're going to be wrong, but the key is, how do you manage when you're wrong and how do you manage when you're right? The way you manage being wrong is you cut your losses quick and you let your profits run. You do that, you're going to make some money. All right. All right. Ethereum. Same thing about Ethereum. Ethereum last week I said was near support, and the trading range was between 2,700 and 3,200. I said it's in a downward trend, but it's below the 10-day moving average, and it took out that near-term resistance at 32. Where it was at. So let me read my notes here. So Ethereum took out resistance at 3,200. New trading range between 3,200 and 3,600. And right now, if it takes out that 3,600, where it's actually was trading at 3,600, right around there, I expect it to go trade between 3,700 and 4,000. Understand the old high is 4,400. You're right near the old high. It's trading extremely well. That was Ethereum. Cardona ADA, right now trading at $2.24 in the trading range between $2.16 and $2.33. Excuse me, so much. If it goes above $2.70, look for it to challenge its old high at $3. So right now it's in the trading range. It's broken through the near-term resistance. If it can take out that, if it takes out the $2.70, I expect it to challenge at $3. Again, it's really close to its all-time high. And based on these cryptos, if you get any buying behind it, they can push Ethereum, Bitcoin, and ADA can all push to their old highs if they get the opportunity. Doge, major resistance at 27 cents with support at 23 cents. If it can take out the 27 cents, the next stop is 30 cents. Understand something though. The all-time high on this, which was, I always say it, is 70 cents. So even if it takes out the 27 cents and the next stop is 30 cents, you got a lot of work in this coin. So I'm not a fan of it for some technical reasons. And one of the technical reasons is on the Doji, there's an unlimited supply of coins. Anytime you have an unlimited supply of coins or anything, inflation comes into play. And there's also, as supply increases, if demand stays the same, the price is going to drop. So I'm not a big fan of Doji for of several reasons on the technical side. Ripple, trade up to resistance at $1.08. I think the next stop is $1.21. So those are my reads on the cryptocurrencies. All right. Hi, I'm Marvin. Hey, Marvin. I like that. Hi, I'm Marvin. By the way, I wasn't even sure if we were going to be able to have our session the way that Facebook is getting slammed, and then the outage and the problems that we had on Monday. It's been an interesting conversation. All right, let's talk about the stock market now. A couple things. One, you guys know I use the VIX to tell me when to get out and when to get in and out of the market, or basically get in the market. As much as we've seen the volatility, the VIX has not given me a buy signal with all this volatility. It's almost as though the market now is I shouldn't say comfortable with it, but the market now is not afraid of the volatility. And what's going on is this. You have two camps out there. You have the one camp that thinks high interest rates is coming, which is going to slow down the economy. High interest rates here. It's time to get out of the tech stocks. The other side is higher rates are not coming. The economy is going to be fine. Everything's going to be smoothing. There's no reason to get out of the tech stocks. So you're seeing that battle go back and forth, back and forth. In my own opinion, a couple things going on. One, I mention this and I always mention this. I study yield curve theory. We've never, ever gone into a recession when we had a classic yield curve. All right? So we have a classic yield curve. The other thing is we're going into earnings season. All right? You have a number of corporations that business is actually going extremely well. So I expect that to hold up. I expect the numbers to be really well. Now, you have some companies that might be trading at a higher multiple, but that's a forward multiple. So the question really is going to become is if the earnings come out, is it going to hold up? You guys have seen what's going on with natural gas and oil, and also some of those things where they had the spike in the run. that's going to have an effect. Oh, you know what else is running? The dollar's running. The U.S. dollar's running. Really interesting. The dollar's running. It's getting really strong. And again, most currencies reflect the strength of their economy. Now, they might diverge, which means the economy might do well and the currency depreciates. But at some time, over the course of time, they will converge back together. So the deal is the dollar's strong. The economy is actually heating up and doing better. So I don't think that we're going to see a recession. I also think this is a correction. I think corrections are healthy for the market. Nothing can go straight up. Nothing can go straight up. These corrections allow people to get out that want to take profits, those who are scared, and so forth, and then it consolidates. Now, I'm going to say something to you guys. Oh, what's going on, Marvin? I'm going to say something to you guys, and a lot of people don't understand this. Markets run when there's no fear in the market. But the deal is, let me tighten it up. Markets can get extended and really make some big moves when there's no fear in the market. So when the average investor says there's no way I can lose money in the market, that means there's no fear in it and the market will run. But those typically will lead to corrections, all right, when there's no fear, because at some point when that fear hits, it's going to pull this thing back and you're going to see a correction, a consolidation. So this consolidation is getting those fearful people out of the market. It's getting those that want a short-term trade out of the market. And it's also for the institutional investors who are different than us, it gives them a chance to add to that position. The other thing about institutional investors in this kind of environment, you'll see some institutional investors literally hold the stock up. Yeah, they'll hold it up. They won't let the selling pressure take it down. And the reason being is because they've got a big position in the stock. Again, if they're long, couple of million, let's say the stock trades 100,000 shares a day, 200,000 shares a day, they're long several million shares of the stock. To go in every day to buy 2, 3, 5, 10,000 shares of stock to try and hold this thing up, they'll do that every day and all day. All right, that's what they do, especially if they plan on being in the stock long term. All right, let's talk about some stocks. Tractor Supply. What we talked about, Netflix. So let me put it up here. Tractor Supply. I'm putting this symbol up. Tractor Supply. Tractor Supply trading extremely well. They're basically 8% off their all-time high. So what happened was, sorry for this, Tractor Supply broke down support, went to second level support, and then between yesterday and today, it rallied back up to the first level of support. All right, so it's right in that trading range to go back to the all-time high. So like that one, trading really well. You got some resistance at $199, but it's trading extremely well. The other one, everyone's darling. So let me put that one up. Everyone's darling that everyone's talking about. So I'll put two of them up because everyone's talking about the two of them. Let's see, Upstart. So there are the two, Upstart and Affirm. Upstart, again, Upstart, just like Tractor Supply, it broke its first level of support, went down to second level of support, bounced off that, and now the stock is basically 10% off its old high. In a trading range, has some resistance at 315. You take out that 315 resistance, which is not much, it's minor, but it's there. You take out that 315, it's going to challenge the old high at 340. Again, one of the things that you want to look at, and I stumbled across this, but follow me on this. One of the things you want to look at is during times when the market sells off, whether it be a correction, whether it be a recession, when the market sell off big time, look at the stocks that hold up. Now, they all come down, but some come down more than others. Look at the ones that come down but don't come all the way off. And the other thing you look at is look at the ones, especially during the recession, that the stock is still performing. Case in point, 2008, in 2008, Apple, during the Great Recession, Apple set a record for sales. It sold more phones than it ever had done at any time in its past. It sold more items in the middle of this great recession. Now, the stock did not go up. It actually went down a little bit. It stayed down. But as soon as the market turned, as soon as investors got more confident in the market, Apple stock took off and never looked back. So it didn't give you the big sell-off to give you the big buying opportunity. If you look at Affirm, if you look at Upstart, they didn't give you the big sell-off. All right. Now you look at some other ones, and I can pull up some other ones. They gave you some big sell-offs. Now, so Upstart, Affirm. All right, let me give you some other ones. And we talked about these stocks already. All these stocks short. All these stocks are short. All right. And the first one I'm going to give you is, come on. The first one I'm going to give you is Forge. The next one I'm going to give you is, let's see, SRAD. The next one I'm going to give you guys is Forge, Oatley, Otly. And again, if you listened to the call last week, you know I'm repeating a lot of things here, a lot of these same companies. Oatley, Rad, Fresh, and the last one, which basically just fell straight out of bed. I mean, it just fell. It just collapsed. It was Duolingo. All right. One of the things I talk about, one of the things I share with you guys is during periods like we're in now, where the market's having a consolidation, where volatility's in here, where we're down big, investors not sure if they want to be in. One of the areas that gets hit the hardest are initial public offerings that are not trading well. So let me give you a little explanation. All the IPOs do a roadshow. They go out and they pound the table and they tell Wall Street and investors around the country and around the world just how wonderful and how great their company is. They provide information that these investors will never get from them again. All right? I'm not calling it insider information, but it's the closest thing you'll see to inside information. They're telling everyone why they should buy the stock. The next thing that they do is the investment bankers will take a read from the institutional investors in terms of where they think the deal should be priced. And the way the institutional investors do that is they put what's known as an indication of interest in terms of size and price. I want to buy, 1 million, 2 million, 5 million shares, and they tell what price they want to pay for it. That's called building a book. Now, individual investors like you and I, we don't have that. We can just put indication of interest in, but we can't put a price in. All right, we're price takers. Institutions are price makers. So with all that going on, these institutions help them determine where the stock should be priced at. They price it, then brought it to the public, and their stock could not hold its initial public offering. Now, one of them is not below its IPO, but some of the other ones, they're below their IPO price. So one of the things I look for when I get into a really nasty market like we're in now, a lot of volatility, investors are really cautious, not sure which way they want to go, up or down. One of the things I always I tell people is look for the IPOs that came public recently that are not trading well, and look for those that are trading below their IPO price. They're shorts. Every one of these securities I just listed that I put on the short side are at their all-time low, I believe, since they went public. The only one I'm not sure of, and I'm pulling up now, is Duolingo. Take that back. Now, here's what's happening with Duolingo. This is interesting. Duolingo, and I'm not even sure if I'm pronouncing it right. I'm giving you the date. September 24th, Duolingo hit a high of $205, and it closed that day at $200. All right, that was September 24th. Today, the stock got as low as 136 and closed at 141. It's had, 8 straight trading days down. All right, 8 straight trading days down. That's a stock that you basically, you want to stay short, be short. I expect it to challenge. The all-time low right now is 120. I'm not sure where it's going, but there's the path of least resistance is to the downside. The other one, Fresh, FRSH. Fresh, same story. I don't have the IPO price. Do I have the IPO price of Fresh? Bear with me a second. I'm looking at my notes. Of course, I don't. But I can tell you this. Its second day of trading, Fresh hit a high of $49 a share. Since then, and that was on September 23rd. Since then, every day has been down except for one. And today the stock closed at all-time low at $39 a share. All right, so that's another one that you can actually, I would stay short if you got short. The other one I put up here, what's going on there, Chung? The other one I put up there was Oatley. We talked about Oatley last week. That's the oatmeal milk. And Oatley, make sure I got the right one. Oatley's at an all-time low at $13.5. All right, that's Oatley. And Oatley, again, I'm not sure where it went public. But the one thing I can tell you on Oatley, you just look at my numbers. Oh, Oatley went public at 17. Oatley went public at $17 a share. Today it hit a low of $12, closed at 13. Again, straight down. Since, basically it peaked and it's been in a downward trend ever since. I told you about Dual, and the other one was, SRAD, SportsRad. Sport Trade Group. Sport Trade Group closed today at $22. Been as low as $22 and change. $22.09 is a low. 22. Closed today at $22.86, and it's again in a downward trend, and it's been basically creeping down every day. So those are stocks that you now can, if you're looking for things or ideas to get on the short side, you can get on the short side of all these. They're not trading well at all. I'm not sure where the bottom is, but again, I don't see much fear to the upside. Now, with that, those are all the stocks I have for you. We talked about track this one. Okay, that's all the stocks I have for you. So if you have something that you want me to look at, I'll go through. I'll take a look at it. Just give me the symbol. If you have any question or anything you want to throw at me, feel free to throw them at me right now. Again, the thing to look at. Oh, by the way, we're in earnings season too. So do not sleep on your companies. Whatever stocks you own, know that we've entered earnings season now in October. So do not get caught by surprise with one of your stocks reporting earnings and you not know what it is. All right, we are in earnings season. All right. I'm not sure. Is that a symbol? SHIB? I'm not sure. I don't recognize it, don't see it, don't know it. So if that's a symbol, I can't help you there. All right, I don't see any other questions. I don't see any symbols you guys want me to look at. All right. Cool. I guess. All right. I guess we'll have a short one. Again, guys, so I'm going to reiterate what I'm saying, and then we're going to hop because I don't see any questions. I've said everything I had to say. So the thing I'm going to say to you guys is I don't think we're going to sell off. Shiba. I don't see it. I don't see the Shiba INU. Is it trading on NASDAQ? I see a Shibarua machine, but I don't see what you're typing. They all say the Shibarua machine, and that's SHIBA. It's a crypto, that's why. All right, let me see if I can find it. Oh, there it is. I don't know. Just looking at the chart. Okay, well there you go. Hold on a second. Let me go back a little further. All right. So a couple of things here. I'm not even sure how to read this. It looks like it's trading in fractions of a fraction of a penny. So I'm not sure how to read it. Here's the deal. It has run. It's basically spiked the last 3 days. It's just run. I don't know what's causing it to run. The thing I would say to you is you also have some stock or some overhead up here at the 0004 range. all-time high, so you're not near there. I'm not sure what made it run. Now, here's what I'm going to say to you. The run this thing had over the last 3 days, I would not be trading this right now. So let me explain why. If you go long, it's really, really overextended. In fact, it's so extended, you'd want to see it pull back and consolidate and go sideways for a while and trade sideways to get this fast money out of there. The other reason why I wouldn't buy it is it could pull, as you guys know, it could pull back and drop because of the extension it has. But trying to short this is like trying to catch a falling knife. It could go either way, it could squeeze you. So I basically, what I would say is, one is I would sit on the sidelines and watch it. I would look for a period of consolidation. And at the period of consolidation, if it started to break out from there, then I would look to actually buy the currency, the crypto. But again, I would not, and by the way, I'm going by straight technical analysis, which is, I think, the way you should be trading these cryptocurrencies. So right now, I wouldn't touch it. I'd watch it as a spectator, looking for that pullback and consolidation, and then a breakout, and then I would go with it. If you're not sure what I'm talking about in terms of consolidation and breakout, you'll see that I'm looking at the same one. If you look at this thing between September, if you look at the way it traded for basically the whole month of September, it was basically consolidating. Actually, the consolidation actually goes back to May 2020, or May 2021, excuse me, where it was in a trading range between 0.00006 and 0.00001, I guess it is. It's been in a trading range. All right. And then it finally just broke out. So that trading range, that consolidation is a squeeze. And one of the things you want to see during periods of consolidation is you want to see volume dry up. And if you look at the way this was trading, it spiked in September 16th, then it traded sideways, consolidated, and then it started its breakout, which started basically beginning of October, end of September. So again, it's all there for you to see it. You just got to know what you're looking for. Yep, that's what it did. And the move was through that 0.0000959 was the move to breakout. Some crazy things. So that's what I see. Again, I would wait. The only reason I'd wait now is because it's made such a move that, and again, it might keep running higher. It might pull all the way back. But right now, you're kind of like in no man's land. If you were an options trader, this would be a great place to actually buy a straddle. Really would. It's not going to be cheap, but if you buy a straddle or even a collar, and buy the collar, so that way when it moves up or down, you make your money. That would probably not be a bad play. But again, these are cryptocurrencies. I am looking at the futures on it, so there's probably some options on the futures. But that's what if you're an aggressive trader and you definitely want to be in it, I'd put a collar on. I'd go long a call and long a put. All right, and basically I'm looking for volatility. And based the way this thing's trading, you're probably going to see some volatility. All right, that was always interesting. Anything else? I'll put that on my list too. I'll start tracking this thing. I just don't know how you talk about it in money. So it must be, I guess you buy a couple of thousands of them. That way, you can actually get like a dollar amount. But I'm writing it down anyway. So that was SHIB. All right, crypto. All right, it's on Milligan's watch list now. I got that. I'll keep an eye on it from here on. All right, I don't see any other questions. Again, guys, make sure you check for your company reports earnings. You don't want to get blindsided where they either beat or miss the number and then you're not there. So just make sure. And I think earnings season is going to have a big play. It's going to have a big play. It's going to be interesting to see. The big question is going to be is, in terms of institutional investors, in terms of Wall Street, are they bullish or bearish, the economy? That will depend on which position they take. And right now, I always call this now the environment when the bulls and bears are battling it out. There's a battle going on. Over time, we'll see who's right, but the bears think the market's too high, the bulls think the market's too low, and we go back and forth. And so we'll see. We'll see. All right, guys, I'm about to sign out. Oh, one other thing. I mentioned this to you guys. I'll mention it again, that I'm in talks, not in talks, I'm working with another company that actually has a TV channel, TV station, not station, TV channel, and they're also on several other platforms where I'll actually start providing some my Wall Street comments and my Wall Street wrap up and some, and some videos about investing and trading. So we've signed agreements, and I'm in the process now of basically with them creating the content. So I'm excited about that. So I'll have more of that, and we're going to go into more detail, and it's the video, so you'll actually be able to watch it. I'll put some PowerPoints up there, not just me talking. So I'm excited about it. All right, with that said, have a great week. Remember, patience, and it's okay to be on the sidelines. When in doubt, go to the sidelines. You can't lose money being in cash. And as much as you want to trade and make money, if it's not the right environment for you, if you're not making money, then go to cash. Go Lakers. Well, last night I was yelling, go Yankees, and after like the fourth inning, I had enough. I couldn't take the pain anymore. All right, guys, have a blessed one, and I will see you next Wednesday. Professor Milligan, out. Thanks.